Okay, good morning, folks. See, we've got a lot of people joining. We'll just give folks a minute or two and we'll be on our way. Okay, I think we've got a quorum. Good morning, good afternoon, good evening, wherever you're calling in from. Thanks everybody for joining this webinar on the topic of optimizing solar asset evaluations in support of M&A transactions. I'll be your host today. My name is Brian Grenko. I oversee our technical advisory team here in the US for VDE. And I'm super thrilled to be joined by Matt Murphy, CEO of Flux Energy, Joshua Worth, founder and CEO of Daly Energy, and Daniel Moaktitter, who's our performance engineering manager here at VDE Americas. I'll let those guys introduce themselves in a minute, but first off, I just wanted to kind of set the stage here, real quickly introduce VDE if there's any folks on the call that aren't familiar with us. We identify and mitigate technical risk for solar and energy storage project stakeholders. We've supported the financing of over 15 billion in solar and storage projects. That's everything from DG, distributed generation portfolios, up through utility scale solar projects, making us a market-leading provider of owners and independent engineering services. A lot of people know VDE here in North America for our differentiated hail risk intelligence and loss prevention. So we help project owners and others identify return intervals for different types of hail events, and then calculate things like probable maximum loss for projects. We work with all the leading tracker manufacturers to help them design their projects for not just wind, but also for hailstow. And we also provide independent technology reviews and inspection services. So anyway, enough about VDE. Why are we here today? Well, we're here to talk about solar project transactions. And there's a lot of news in the fourth quarter about various solar portfolios that have been up for sale, and there continues to be more here in Q1. We're certainly seeing a lot of activity. There's just a handful of different projects here and portfolio announcements that were kind of just discussed in the press in just the fourth quarter alone. So really, what are the things that we want to talk about here on this webinar? Well, we want to cover why is it that we are seeing such an increase in secondary market transactions and what makes that interesting. We're going to talk about the factor effects that really drive project performance and some of the key challenges in figuring that out, how to assess project performance. And then how do we address those challenges? How do we address those issues? And in that process, there's a lot of things that can get missed. So how do you ensure that you're identifying and mitigating all that risk? So what I really want to do now is introduce our panel and let the folks on our panel kind of introduce themselves a little bit more. And first, Matt, I'll turn it over to you to introduce yourself and Flux Energy.
Cool. Thanks, Brian. Excited to be here. So I'm Matt Murphy. I'm one of the co-founders and CEO of Flux Energy. We're a startup. We've been going about 6 months now. We focus on asset revitalization or asset second life through a combination of redevelopment and repower services. Redevelopment, if that term you're not clear what it is, don't feel in the dark. I made it up, but I have a feeling that you're gonna hear it a lot going forward. Redevelopment is really looking at an asset and doing a combination of adding batteries to get into new programs, repowering in the right situations, and renegotiating and amending contracts to bring better financial returns to assets. And we're finding that for the right asset, there's significant financial opportunity. Repower services, topic that you guys are probably much more familiar with. Everyone has a repower in their fleet. They're slow. They take a while to figure out. It's highly technical work. The reduce, reuse, recycle portion of the work is important and difficult. So we have built out full services where we can design, properly reuse equipment, and get you the best and most optimized repower. And then we have the ability to execute on those repowers for customers.
Great. Thanks, Matt. Next, I'll turn it over to Josh Worth. Josh, why don't you introduce yourself?
Hello, everyone. Good morning, good evening. My name is Josh Worth. I'm the founder and CEO of Daly Energy. We're a solar and storage modeling platform. We have an API, a web app. We're used throughout the life cycle. We work with asset managers, large IPPs, IEs, development shops, and very much looking forward to talking with you guys about this.
Great. Thanks, Josh. And of course, joining me from VDE is Daniel Motiter. And Daniel, why don't you go ahead and introduce yourself?
Yeah, I lead our performance engineering efforts here at VDE. So everything from capacity tests, energy models, involved in the IEC 61724-1. We do everything performance, and we've been noticing an uptick in all these M&A activities and portfolio reviews, looking at historical data. So a little bit different than our typical just let's develop new projects. A lot of the new work we've been seeing is more along the lines of like kind of this repowering or redevelopment or just transactions in general.
Great. So I think we've got a good cross section of folks that are, looking at this issue from a variety of different angles. And looking at the audience, I'm really excited. We've got a good breakdown, a lot of asset owners, and I see a lot of developers that are joining here. We've also got a lot of service providers, other technical advisors, and we have, it looks like we've got some O&M focused and asset management focused companies as well. So I think we've got a great crowd. I'm expecting a lot of really good questions from the crowd. Hopefully we're going to go through and answer some of those ourselves. And I'm sure there's a lot of other good questions that we haven't prepared. I want to use this as an opportunity to kind of mention just logistically, there's a Q&A feature up in Teams, if you see like next to the chat button, that you can specifically use. So if you have a question as we go through and have our discussion, please don't hesitate to submit your questions via that chat forum. And I think the way that these things work best is for us to hopefully integrate some of those questions here as we go along. So with that said, let's get into it, guys. So yeah, the first question here early is, why are we seeing such an increase in secondary market transactions? I think there's probably a few things that come to mind, but Matt, what comes to mind for you?
Oh, I think it's a sort of convergence of a lot of different themes sort of crashing into each other all at once. Of course, the ITC and PTC sunset is going to slow down new development, and there's a huge operating inventory. So people are interested in, can we get more out of these assets? I think that there's been a slowly building momentum to focus more on optimization of asset performance technically and financially over the years. And this is like sort of serving as now's the time. As well as I've heard just numerous people, especially now, but it's been building as well, talking about there is more opportunity to expand assets, to retrofit them, to bring better returns. And then I would just say, lastly, the price is right for the first time in several years, right? These assets have been trading crazy high for several years. It's been difficult to buy operating assets. Right now, with some players deciding to exit and other players deciding to double down, we're in a much more stable pricing environment for operational assets, which is appealing to those that are doubling down.
Great. Yeah, Daniel, you've looked at quite a number of assets that have been up for sale. What are some of the things that you're seeing, and what are some other reasons why you think we're seeing such an increase in secondary market transactions?
On the commercial side, I think just generally they haven't been performing as people maybe expected, and there's this whole notion of like capacity at any cost and just getting modules in the ground. And I think a lot of times maybe O&M plans weren't where they needed to be, spare parts weren't where they needed to be. And just, I think there's also not, I think labor is also an issue for maintaining some of the inverters and having the right folks involved. So I think there's a multitude of reasons why. Mainly, I think it just comes down to the dollars coming in that didn't meet expectations.
Yeah, and Brian, I think there's a global theme here going on of just we've all been so focused in accelerating the adoption of renewable energy, right? Establishing this as as a real market and a real industry. And we've done a great job, but the fastest way to do that is get more assets into the ground, right? And you have tax equity and debt, you sweep cash out of those assets, you redeploy it, you build more assets. I think now is sort of the time where we're turning inward and making sure that the whole industry is honoring the commitments we made to assets that run well for their useful life.
Yeah, that's a really good point. So Josh, I know you work pretty closely with a couple of, the leading asset owners. What are you hearing from them about, stuff that they're either buying or selling?
Well, I think everyone, the wolves kind of come off people's eyes a little bit here. They've been operating assets for sometimes 10 years now. They're starting to realize that they're not kind of following the pro forma that they set out in the start. And so they're looking at going forward as they're deploying even more, that they have to kind of tighten things up. And all the cash flow comes post COD, right? So these projects turn on. A 5 or 10% underperformance can be very significant in the waterfall, the cash waterfall for these folks. So to be a sustainable business and to stick around, you actually have to figure this out. It's not something that they have a choice anymore. So there's a really big push, and I think for performance engineering, it's a really, as a technical as a technical vertical here, it's an interesting space because there's always been such a disconnect between operating assets and performance modeling in the general sense. There's no feedback loop. There's hardly any retrospectives. It's kind of fire and forget. And so there's a real opportunity here just to learn from the basics and learn what you got wrong and right early on in the process. So I think there's a lot of room here for people to improve and benefit from.
Yeah, that's a really good point. We're going to definitely dive into that a little bit more. But kind of circling back, the second part of this question is really like also what makes it interesting? What makes secondary market transactions interesting, like versus developing, greenfield or brownfield projects? So maybe Matt, let me kick it back over to you.
Oh man, that's almost a whole webinar in itself. I think so. Ultimately, it comes down to opportunity and opportunity not necessarily currently priced into the deal. Battery storage and battery storage programs are designed a lot like solar programs were in the 2011, 2012, 2013 vintage. So they're lucrative and they're designed to accelerate adoption. Adding battery solar assets is a faster way to generally do it. And we have, interconnection queues backed up nationwide. So these assets present a really good canvas to potentially put a new project on your old project and revitalize it. I think for sellers, it's an interesting opportunity because sellers generally need capital or they want to use that capital for something else, or they're just exiting. But for sellers, it's an interesting opportunity to say, hey, you can go through, assess your fleet for redevelopment, potentially do some of that work and get a much better price when you're trading your assets. And for buyers, doing that same sort of analysis, you're not pricing that upside into the deal generally, but you're going to have a really good understanding between portfolio A and portfolio B of which one presents the better financial opportunity long term. We've done a quick analysis during transaction for IPP recently, and the difference between the potential of portfolio A and portfolio B because of location, size, various other technical circumstance was significant, and it really changed their desire to buy portfolio A over portfolio B.
So am I hearing you say that if you have an operating project, there may be an opportunity to add BESS, and you can not only participate in getting an offtake agreement specifically for the BESS, but you can there might be an opportunity to renegotiate the original solar PPA to increase various revenue streams?
Yeah, definitely. So redevelopment, batteries are really exciting, and getting into battery programs are really exciting. And one thing, it's not universal, but it's like it's pretty prolific across the industry that storage incentive programs don't necessarily make you not able to fulfill your PPA obligations anymore. So it can, in various places, act as an add-on. It's not a replacement. It's literally stacking new revenue streams while being able to maintain your core contracts. We also find, like, all the time, these off-takers need things, and they're your partner. And part of the process, it's not going back and saying, hey, I need better terms in my PPA. But there are things that they want that likely just because the communication isn't there or the channels aren't right, or frankly, they need help figuring it out. There's oftentimes financial opportunity to just provide more things to your off-taker, to your long-term partner. And we've found off-takers to be extraordinarily receptive and very appreciative of just opening up a conversation about how we can help them more.
Great, that's super interesting. I think there's also, a lesson to be learned from the wind industry. I mean, we're seeing a lot of wind repowering sites, and I think one of the big reasons why, not just they were maybe built several years ago, but I think from a permitting standpoint, it's really difficult to permit new wind projects. And it's becoming more and more difficult. And I think anyone that's been following the press knows that the same thing is also becoming true of large-scale utility solar projects. There's regulatory headwinds. There's a lot of like local community pushback. And so it seems to me like redevelopment is a way to, definitely gives you an advantage from a repowering and redevelopment standpoint to work with an existing site.
Totally. And yeah, you can definitely, I mean, part of our thesis is that you can accelerate interconnection modification significantly faster than new interconnection. And you're seeing these trends like in Massachusetts right now, there's really, really strong storage programs, but the new storage assets are caught up in the same queue that the solar has been caught up for so many years, and they're significantly delayed. Massachusetts last year released an emergency order increasing the price of their credit for storage for time, essentially for time shifted energy, because there's just not enough assets online, and they're not going to get online in time. So looking at your operating fleets in various markets, it makes a ton of sense.
Okay, that's good inputs there. So let's maybe segue a little bit and talk about, what are the things that are, actually driving project performance? Now that we know that there's a market there and we're starting to look at projects, what are we finding when we're looking at projects? Maybe that's the first place to start, is when we look at projects, what are we typically seeing? And maybe Daniel, I'll put that question to you first.
Yeah, I would say there's a variety of just underperformance issues that are hard to attribute to one specific loss factor. Sometimes you can tease it out, whether it's shading or soiling or mismatch or degradation or whatever it may be. But I'd say one of the biggest impacts to just what hits the revenue meter is inverter availability. And I think, and here's a nice slide showing it. It just understanding the like certainty in the calculations, like it's somewhat difficult to really prescribe a certain loss value to like soiling or even module degradation. Some of those things are harder to remediate. Or can't be remediated. And then the impact on IRR is, pretty much immediate if you can get inverters back online. And of course, the remediation difficulty of an inverter definitely depends on why it's down or why it's being thermally maybe derated. So I'm very bullish on looking at inverter availability as like the first step when evaluating a project. One, it's really clear to see like what those timestamps look like and what percent of inverters were off at any specific time interval. Two, it's really high impact. A lot of times, I mean, I think Matt was telling me about a project that about 50% of inverters were offline. So, right, that's going to have a huge impact. And then I think it's low-hanging fruit sometimes in terms of fixing that problem and getting the availability back up to 99% or 98.5% or whatever your assumption is. And it's pretty, it's low uncertainty in terms of you can calculate the delta between the availability and get a really good idea about how much energy you're losing and how much, if you remediate, you can recapture. And sometimes it's programming errors or firmware problems. Sometimes it's thermal derating also, which can affect performance of your inverters. Other times they're just down. And of course, there's central or string inverters in the conversation that I have around there, but that's for another time. And even some folks at, PVRW were mentioning they're working on like early detection and failure, like ways to identify failures for inverters. So you can get an idea if they're like the inverter health themselves to predict future availability.
Daniel, are you seeing people starting to look at a lot of the temperature data points coming out of inverters? Because a lot of inverters push out a lot of temperature data that I don't find owners typically paying much attention to.
Yeah, the temperature data is great. I think you can see when those thermal deratings happening. We had a client interested at one point maybe building some shading structures around the inverters. So we're pricing that out and what we would think the net gain in energy would be and whether or not that investment would make sense. But yeah, I think the temp data is important for sure.
Daniel, do you see a lot of deviation from what I would say like is the O&D file specifications for the temperature derate in operating assets?
Yes.
Yeah, that's a
Yeah,
pretty broad question, but yeah, and with one correct answer, yeah.
Yeah,
But yeah,
well,
yeah.
yeah, there's definitely discrepancies there, I'd say. It
Well,
also
Josh, I
depends
want to hear a
how.
little bit more about your perspective on this, because I think you were telling me before that you've worked on a project or two where you kind of quickly identified, just looking at the data, that some of the inverters maybe just didn't even have the right set points, and that kind of contributed to some of those observations that you were talking about. Tell us more about that.
Yeah, so disentangling where in the loss waterfall there are the bottlenecks or the actual things that you have control over is difficult. And a lot of the specifications that you're measuring against or you're comparing to aren't really they're not met in the field just at a base level. So like the inverter efficiency is one of them. The temperature derate's another one. Those are two kind of really basic inputs that have huge multiple percent, swings in the outcome of an annual energy yield, that are just kind of wrong at the start of the project. So you turn on day one and you're already deviating in that way, and some of those can be remediated and some of those can be fixed with talking to the supplier or insulating the inverters. I think Matt had that in one of his comments. So there's things you can do, but there's also just a lot of sometimes there's just commissioning errors. So power factors being left on during the testing phase that don't come off. And so when you start looking at things like that, on larger assets, you're scratching your head a little bit, but the construction teams are moving pretty fast. So there's sometimes just really obvious low-hanging fruit that you wouldn't show up in any of the SCADA or any of the information that you're normally pulling through. So being able to compare against the benchmarks really, or your baseline, is really critical in all of these topics. And I think the inverter is really the key point in the health of the power plant, as Daniel mentioned. Is if a couple strings go out, it's not a big deal. But if one inverter goes out or multiple inverters go out, that's a key point in the system, and so that can drive a lot of impact.
Yeah, and I think here's a slide that Daniel, you had kind of presented here, where this is just a sample project, and you're looking, the y-axis here are different inverter IDs for a utility scale project, and you're kind of looking over time here, and it's fairly straightforward and easy to see these signals, Daniel, right?
Yeah, and sometimes you'll see whole circuits down. So that would be denoted from like a vertical line on that graph, seeing like 6 or 7 off at the same time. But I think it's easy for me to just say what's wrong. And then that's a whole other question of like how you actually fix it. I think Matt could probably provide some details on how to remediate inverters and like what his experience has been like.
Yeah, Matt, like we
Oh,
might know
man.
the inverters are broke, but what can we get replacement inverters, or can we get spare parts? Like, what do we do?
Yeah. So I again, another topic we could do a whole webinar on, and I'm sure a lot of our IPP friends and O&M friends that are in the crowd today, this is probably their number one problem, right? Real quick, just to talk about low-hanging fruit, while you have slides up, Brian, why don't you bring up that slide of that acquisition that Daniel mentioned with the 50% availability?
Is that this one here or this one?
Nope, it's the first one.
Okay.
Cool, thanks. Yeah, this is an interesting project, and this is a golden goose. If this is a project that had $230 PPA and was performing at 50% availability, if anyone has any of those, they want to sell them, we can find a buyer quick. But this is a really interesting concept about upside transactions that sort of fits with everything we're talking about today. So it's an asset where the inverters were operating at 50% for 2 years, sometimes under availability. And it was priced into the transaction that the inverters would just be replaced. What we found when this transaction was purchased and we went in to do the repower work was it was actually just poor maintenance. It's in a desert climate. There's sand in the inverters. There are control boards that have been replaced but wired the wrong way. The fans weren't working properly. We wound up overhauling these inverters this was several years ago. They're still operating today. And the inverters themselves probably 13 or 14 years old now. But it was plan for what you think you need to do, acquire at that price, and then go in and value engineer. And in this case, through having a really good inverter manufacturer that could provide parts and provide help and just technical expertise, we're able to save significant money on the repower. And as I said, they're still operating today. So that project's been pure home run. I think it more than doubled in valuation once that remediation work was complete. But just in general, I think inverter uptime is the most difficult topic in the entire industry right now. It is brutal, and it's brutal for some. I sort of sympathize and understand, but we just do not get the same response from inverter manufacturers that we used to. In 2012, I could call SMA in Massachusetts about an inverter offline this afternoon, and they'd be there tomorrow morning. Now, inverter pricing has dropped, right? Inverter pricing is incredible. Inverters, they cost nothing compared to what they used to. So there's just not as much money in the equipment to have so that manufacturers can build out this really robust warranty fulfillment program. And so you have to attack it there, right? You have to help with making sure you have spare parts. You have to invest in more spare parts than you think you need, whether it's whole string inverters or components in central inverters. You have to push for sort of right to repair. Get your own M providers trained, or make sure there's people that work specifically on your inverters in an area, which is extremely challenging. Both getting the training, getting it at the right price, and then having people in areas, because these sites are all remote and sometimes very spread out. The best remediation for keeping your inverters up, having the spare parts and the expertise to do so, is to handle in procurement. That's difficult, right? It's really difficult, especially, all these people sitting here with operating fleets going, that does not help me. But that's the best place. That's the place where you have the most leverage and teeth to negotiate. And an interesting part to tie it all back in is just that if you're thinking about repowering, you're thinking about redevelopment, you're thinking about procuring again. And you have an ability to learn from what we've all learned over the years and get some really good teeth and maybe even pay a little bit more to get some better service to keep those inverters with high availability.
Matt, those are great points. Sorry, Brian. Matt, those are great points. Do you think I have a hunch, maybe I want to get your thoughts on it. Do you think that we overinvest in the DC monitoring?
Yes.
Versus the inverter monitoring? I feel like we have infinite string level.
100%. And I can't say who it is. I wish I could, because I want to give them a little bit of credit. I just worked with the most interesting IPP. They're so smart, and they have basically not done any DC maintenance on any of their power plants. The average age is like 12 years. When it breaks, they fix it. If they see something, they fix it. They invest probably 4x as much as your normal IPP in transformer and inverter maintenance. So they're cleaning filters like on like a 3 or 4x frequency as other people. They're testing transformers, doing 2 and 3 year tests every year. And what I've seen from them is it's been the best performing fleet that I've looked at, and it's got the lowest O&M costs.
Yeah,
which is really interesting.
That makes tons of sense, honestly. And I also think that investing more in the AC maintenance side instead of even delaying cleaning sometimes or whatever it is has such a significant impact. The other thing I wanted to ask is just kind of point this out. I think that inverter availability or inverter downtime is also a function of where you sit in the grid too. If you're in high congestion or if you're behind a POI and you're way overbuilt on the AC side, you might be able to lose some inverters, and some projects you can't lose a single one. So understanding where you're at and how much you can export at any one time is really critical to evaluating how you address your AC issues.
Yeah, that's a super interesting point, Josh. A couple of the best plants I've ever seen performance-wise have done maybe not a significant overbuild on the AC side, but they've had the ability to lose one or two central inverters and still, everything ramps up through a plant controller. And those plants, they have the same amount of issues as all the other plants do, but they have just stellar uptime. You're in the 99.5% and above. And it's a real interesting. It's definitely something owners should think about in developing new assets. Is the extra spend worth it? Because it's maybe the best way I've seen to guarantee a high performance site.
Exactly. I think that's one of the things that, unfortunately we're talking to people in the wrong group here, but getting the design sizing right. So these things will degrade, things will break. And if as we've learned, it's hard to get spare parts. It's hard to fix that small thing in the inverter that broke that takes the whole 2 megawatts down. So planning for that and designing around that, I think is really important. Batteries will just make that easier in general, but I think these are all key things to size.
I think that brings up a great global point too. And then just all of the stuff we're talking about in a blue sky scenario is perfect, but there's like so many challenges to actually being able to do this, right? When we just talked about changing around O&M strategy a little bit, those O&M scopes are like vetted by banks and IEs, and you're often bound. And when you start, hey, can we do less maintenance here and more maintenance here? It's a difficult conversation and it takes a lot of time. And then with what you said, like a lot of these utilities, you can't overbuild the AC side because they're using the nameplate rating of the inverters as your total capacity, not power at the interconnection. So it's like to get to the optimal scenario sometimes is very difficult just because of the restrictions that we have from so many different stakeholders.
Yep.
Josh, are you telling me that the design engineers aren't talking to the operations and maintenance folks?
Yeah, I think it's maybe one of the funniest like breakdowns ever, right? I always I build performance modeling software that's used by performance engineers. But I really do feel that the customer of a performance modeling task is the owner or the people that are operating the assets. Because if you talk to anyone who's operating assets, they're given something that, a PDF that has 12 numbers in it that they're supposed to hit. And it's very hard for them to reconcile reality with those numbers just as a baseline. And furthermore, they're just inundated with stuff that they don't know how to tease out what matters. So one of my favorite guys to talk to, he always says that he just turns off all of his alerts and he picks what he thinks feels like the biggest thing to work on for his O&M crew, because that's how he's shooting in the dark. And so I think from the technical side, so much of this could be solved just by having that feedback loop and that communication channel opened. Like put your performance engineers out of the front end of the project and have them go live in the field and sit with these guys for a little bit. And I think things would be much better.
Yeah, well, in all seriousness, I am definitely picking up on this notion that some operators are definitely smarter and better than others, and we've seen kind of like a couple of folks kind of differentiate themselves from the rest of the pack, so to speak. Are you guys kind of seeing that in your work and reviewing projects, and when you look at who's operating these projects, are you seeing the same thing?
For sure.
Yeah, I certainly am.
For sure. And I think there's maybe a bias towards feeling like you have to have the best software technology or the best whatever. I think it comes down to just really being able to understand the key drivers and work in that top-down order. And that's that guy I mentioned who just picks the top thing because he just looks at what's the first inverter out and how close is the crew to that site, because that's the thing that drives a lot of these a lot of the the PRs for these projects. So, having that base understanding is really critical, and it's not complicated to get to that point, I don't think.
And I don't know, Matt, if there's a lot of those, really solid technicians around in a lot of areas. What are your thoughts?
Yeah, that's it's really hard. There's just not enough qualified, skilled labor in this industry, and and that it's very valuable. So you can have a problem. O&M providers have a problem where their best technicians are who make their business, right? That's I use you because your guys are great, and they're poached all the time. So you've transitioned. So that part's difficult. But yeah, when the argument first started, I think maybe 2015, I was team central inverter. If you have a good mechanic, you have the best uptime. I have definitely become more and more team string inverter, iPhone, no matter what's wrong, just get one out of the truck and replace it, just for the purpose of keeping solid uptime.
And Matt, on that question, aren't the big inverters now just a bunch of string inverters kind of tied together? Yeah. Is there modularity in the O&M and maintenance and spare parts for the new inverters, or because I know the old stuff, we were learning on the fly, we were building the ship as it was flying, so to speak. But can you talk a little bit about that? I think
there's often modular central components. There's still quite a bit of just infrastructure between cooling, et cetera, in central inverters where you can have different parts break. They don't all essentially come in a box. But a lot of products are sort of going that way. I think Power Electronics sort of pioneered that model, but you're seeing other manufacturers, and they're probably learning the same lessons we are, right? In an absence of qualified technicians, try to make it so you can swap out most of the components at once, just by putting a new box in to keep uptime high.
Yep.
Yeah. That's absolutely the case.
I wanted to ask just a quick follow-up question for Josh. Josh, are you seeing, you mentioned people sort of looking at the biggest downtime and targeting that and then going down the list. Are they most often looking at megawatt hours, or are they looking at megawatt hours times megawatt hour rate? Because I've always found it really interesting that people aren't looking at dollars, they're looking at megawatt hours.
Yeah. Well, not even that most of the time. They're looking at DC or AC capacity.
Yeah, interesting.
Which is even more abstracted. If you're looking at I won't name his name, but he's someone I really respect in the O&M space, and he's managed some huge portfolios that are very distributed, hard to get to. He's the guy who turns off all the alarms, and for him, he doesn't know if n number of strings out on a plant is actually impacting the megawatt hours and therefore the dollars. He has 1,000 alerts when he wakes up in the morning that say you have n strings out. And so that's even more removed from the dollars, is just looking at a capacity number. And so we're in this weird spot where solar is a highly nonlinear thing, right? It doesn't turn on and you can't ramp it like a gas or anything like that. It behaves very much dependently upon the environmental conditions. And so you have to look at it in that holistic way. Otherwise, nothing makes sense, really. And that's why I think there's such a focus on DC side health monitoring, because, there are plenty of issues. We have probably, higher than expected degradation. There's soiling can be abusive. There's tracker unavailability. You have weeds. There infinite number of things. But I think we get a little bit sidetracked by that, and we end up avoiding just cleaning the inverters, like you were saying, or looking at those really high value things. And if you just look at those couple failure points, you end up performing a lot better. And I think your anecdote about the portfolio that just focused on that doing better is really, I think, a good anecdote or example.
Yeah, and I find it super interesting because I could go back to experience in the past, but just the Flux experience, the assets we've looked at so far, the delta between the lowest PPA we've looked at and the highest PPA we've looked at is 4x.
Yeah.
So all megawatt hours aren't the same, right? That's a case where you could have a 7 megawatt plant and it would make sense to go and work on that plant rather than its 20 megawatt the 20 megawatt plant that's already offline because it's just generating more money. Megawatt hours
Yeah.
are not the same.
Yep. Especially in the high curtailment area that we're going into now. That's the most critical thing. And putting all that together, you have to go from capacity to megawatt hours to dollars, and that's a hard thing for everyone to do. And I think that's maybe the biggest surprise when I started Daly, was that the thing that people were crawling their way to us and asking us for was to run operational performance models so they can do those calculations. And they're not even, again, a lot of this stuff is really basic. It's not too hard to get to, but just having orienting yourself around where you sit relative to where you could be and how you can fix things, or where you're missing like dollar leakage out of your plants is really hard for people to do. And I totally get it. I think there's just it's from an information point of view, it's just that there's a desert really, right? You're an owner that has a couple PDFs, and then you have all the legal documents totally in line, right? You have all your offtake and your O&M agreements fully scoped, but you don't know where you sit relative to where you should be, or what you could do, or what strategies or retrofitting or repowering would make sense, or totally turn things around. So
yeah, that's a really good point, Josh. We talked a lot about inverter downtime, and that's pretty straightforward and easy to kind of recognize. But the reality is, like, oftentimes there's a lot of challenges with the data that we're provided as engineers. And after you sift through the inverter downtime, then what you're left with is, well, how is the project actually performing? And to answer that, you need to understand, like, well, how should we expect it to perform, and what's the model? And then we kind of can go and diagnose. But I'm looking here, and thanks all for the questions in the Q&A. But I think this is a good point to maybe look at one of the questions here in the Q&A, which is, I think, directed at you, Daniel, and that's, what kind of tools or methods is VDE currently using to evaluate performance of assets? And I think, an important point here is that oftentimes in the context of M&A, we're not provided with much time to quickly go and assess a project and determine, okay, when it's performing, is it performing the way that it should? So can you talk a little bit more about what we're doing at VDE to figure that out?
Yeah, I guess it depends what side of the transaction we're on. But maybe if you were helping like a buyer or something like that, I would definitely look at inverter downtime. I would want to get a snapshot or like a flash of the system, like a flash test of it. So whether it's a capacity test, pseudo capacity test, or just looking at energy yield over a few days and running that against a PV sys model with like time series data from that day, and not trusting the POA sensors on site. So just using one of the reputable satellite companies, and preferably looking after like a big rain event or something like that, because soiling has a huge variability. You could get a massive swing, or if there's a known wash event. So that could help you really get an idea for how well the system's performing, and then you could bake that, like let's say it's performing 3% under. Let's assume no seasonal variations, and then you could basically like adjust your DC module quality factor and your PV sys model and work your way that way. So that's an option. But I really think like a capacity test type method's really strong as well. Like I think someone mentioned regression on here.
Yeah, I found it super interesting as we were prepping for this, with Josh talking about this sort of flash test as opposed to ingesting all this data and dealing with just too much data and all these data quality problems. You take this like flash of a site and it can tell you most of the operating parameters. I found that fascinating, and I don't think enough people are thinking that way when they're going to purchase an operating portfolio.
Yeah, I think Josh, for previous projects, I looked at like 3 days of data, like just finding the cleanest possible data. But Josh, I think you mentioned you only go with even 1 day, right?
Well, it's kind of a strong opinion that's loosely held. It's not for the context of this particular webinar. It's not really too relevant to say that you only need 1 day of data. I think there's so many you need to look at the temperature swings between seasons and so many other things that are important to the long-term health of the plant and its financial outcome. But I think generally speaking, if you're talking about what problems are going on the site, a single timestamp should tell you a lot about what's going on. If you have n number of strings out, if you have n number of inverters out, if you have soiling, or you have inverter efficiency that's strongly biased towards or it's deviating from where you planned it to be, those should all be evident in just one timestamp. So that the presence of or collecting really high quality data is valuable, and so that you can correctly extrapolate the health of everything going forward. But generally speaking, if you're just looking to troubleshoot, you'd be able to spot those things in one timestamp. So I know it's kind of a vague thing, but I think it goes back to a point I made that I think where we invest a lot of our dollars is in maybe the wrong areas. And I think it'd be wise of us as an industry to rethink about where we're making our bets.
So I want to get to a couple of other specific questions in the chat, because I think maybe there's some comments that people weren't necessarily clear. And Matt, I think there's maybe a couple for you, but Matt Tiedemann had a question about how asset owners are financing best additions, and how does that make sense if you've only got 10 years of PPA left? And I think you were kind of indicating, well, there might be opportunities to renegotiate the PPA. Is that right?
Yeah, there's opportunities to renegotiate the PPA that are easier or difficult depending on the situation, right? Some owners are just some off-takers just not interested. Municipal or utility off-takers are very interested. When they are interested, it's in a really opportunistic situation in that you can typically contract the best, whatever your best revenue play is, you can contract it with the existing off-taker, and then when it's contracted, you can finance it and put long-term debt on it, which is huge. We're seeing in some storage markets, either through the use of third-party products, like we have a partnership with a couple of companies that provide it, or just in getting in the correct program, that you're able to sort of contract what looks more like energy, like selling CPEX en masse, looks like energy market participation that you couldn't traditionally finance. There's creative ways to place that long-term debt on it by securing either through what essentially looks like an insurance product, it's not quite, or through just finding an off-taker that's willing to commit, almost like selling strips of SREX in the heyday of SREX in Massachusetts.
Great. And there's another question from Daniel. It said, Josh, you seem to be saying that there was more investment in string monitoring than inverter monitoring, and you just wanted to make sure he was understanding your comments correctly.
No, I think that I obviously don't work in the field. I have computer neck and stuff like that, but from everyone I've heard that runs large O&M teams, there's a flooding of their information space with DC health monitoring alerts. And a basic question like, if this inverter is down for 2 months, how much is that going to cost the plant, is really hard for them to decipher. So if you're managing a large distributed fleet of assets, you're an asset manager, how do you choose and prioritize where to go? It's not that there's not SCADA data that tells you there's an inverter down. It's just, where do you prioritize and how do you strategize around it? That was my point.
Yeah.
Got it.
I also just want to elaborate on my point a little bit there too. I wasn't saying that we shouldn't look at the DC side when we're thinking about preventive maintenance. I was saying that you think a lot of O&M contracts, right? It's hours at cost. So time is money. And when you look at them, the way that a lot of the scope is written, there's a disproportionate amount of time spent walking the arrays and checking little things than there are doing AC and inverter and transformer maintenance more frequently. And what I was saying is I think that we should rethink that a little bit, because those DC checks are important, and that's where safety hazards happen. And the most important thing any of us can do every day is make sure that our sites are safe. But a little bit more of that O&M budget spent at the inverter pad and the transformer pad, I've seen affect performance greatly.
Yeah. Yeah. And I think just if you just look at it from a really rough back of the napkin math, that makes good sense, right? If you have an inverter down, that's worth how many strings of total loss on the DC side.
Yeah. I mean, I've seen through these mandated scopes in O&M, right? Like if you say there's 200 preventative maintenance hours on these sites per year, like 160 of them are spent checking DC health and 40 are spent on the inverters and transformers, or even lower sometimes. So that the sort of ratio there, we have a finite amount of dollars you can spend, just should be examined and tweaked. And as I said before, that's often extremely difficult because it's very hard to get sort of the O&M scope agreed upon by financing modified once the asset's in operation.
You know, there was a question here in the chat that I thought was a really good one, and one that I was hoping that we could cover, and which is that, you know, with aging sites, you know, we've seen over the years so many changes in technologies. There's a lot of inverter manufacturers that aren't even around anymore, but we've also seen system voltages go from 600 to 1,000 to 1,500. There's even some systems being built at 2,000. So how do we address that and like other system design considerations when we're looking at sites?
Yeah, that's a great question. I mean, it's a math problem in the end, right? It's the more you have to change, the more you have to replace, the more cost does the project return. And it can, with like a complete rip out, like 600-volt systems are a major modification at this point. And you can go to having to replace a transformer and then having to significantly modify your interconnection. We could do everything, right? These projects clean slate. The ones that you're going to see the better returns on are the ones that you can modify and reduce the new equipment, reuse as much old equipment as possible, sites that you can sell some of the equipment on the secondary market. And to me, it's anything is possible. It's just, it will affect the financial returns. So a big part of what we spend a lot of time on is design optimization of repowers. Just because done well, it can make a site really, really attractive, and done poorly, it can just be something you shouldn't even have bothered doing. There's no return.
Great. And Daniel, Josh,
and
anything to add on that?
600 volts are growing. It's like a full overhaul at this point.
There's probably still some more out there to find, right, Matt? You're not done with those, right?
Oh no, we see them all the time, but there's no like, there's almost no scenario where it's like someone just didn't think about what we're bringing to the table. It looks like a full gut and remodel as opposed to like just put a new counter and cabinets in.
Yep.
All those modules probably look so tiny on those 600-volt projects, you know, that were built 10, 15 years ago now.
Yeah, that's my favorite game, is fitting new footprint modules onto existing racking. It's like solar Tetris. It's fun.
So, well, that brings up an interesting point, and maybe related to this, which is, you know, what are some of the important things that people miss, you know, in evaluating projects? You know, you can see things in the data. Sometimes you have to look harder to find them, but like the SCADA platforms will only give you some of that information. You know, what are the other things that are easy to miss? And maybe who wants to take that first?
Easy to miss. Right. And go ahead, Matt.
Go ahead, Josh. No, you go.
It's hot potato. You go.
I just think that the transactions are fast, and so the details get missed quite often. I'll tell a funny story. It wasn't you guys, Brian. It wasn't you guys. But I sent an IE to go do an operational transaction. This must have been 9 years ago, and they came back with the punch list, and it was really interesting. And they clearly did a good job, and they paid a lot of attention. It was a great detail. For the speed at which we were going, I was very impressed. But I called the owner and I said, hey, man, it's really, you know, when you do really, really good work, but then you don't open your eyes to the wider world and you focus on scope, you can make big mistakes. And he said, what are you talking about? We did a great job. And I said, you did a great job, but take a look at every single picture of the 5 assets you walked. There's no grass. Those sites are all in violation of their post-closure use permits, and I need to spend millions of dollars to get the vegetation established. So you gave me all these great technical details, but I think at some point in the 5 sites, your guys should have noticed there's no grass. because that's the biggest expense in acquiring these assets. And I just think that really going back to basics and opening your eyes, and all of these incredibly smart professionals that we have on this call right now and in this industry, it's like, open your eyes, look around, really like forget what the scope is. Think about the details. You're going to own and operate this thing. What are you missing? That's one. And then the second one is it's a difficult thing in M&A because people are very nervous about it, but when you buy an asset, you're entering long-term partnerships, and understanding who those partners are and what their sort of attitude is towards the project and what they need and want, I think that often just goes by the wayside, right? And then you get a call one day, hey, I own this site now, and that's not a great way to start a relationship. And I think that part, especially when you're thinking about repowering and redevelopment, is important and very frequently missed.
Great. Yeah. Josh, sounds like you were also gonna add some comments. So hot potato, back over to you.
I think, I mean, obviously the refinancing and M&A cycles are so short, and there's so many things to get through that, it's maybe not surprising that the technical details can be obfuscated or hidden away from sunlight. But I think there's a lot of stuff that could be really quickly checked that has big impacts on the asset performance. So getting into that a little bit more than maybe the all of the side commercial things that maybe are easier to review, or there's someone that can review them, I think can have higher impacts. So can reduce risk, and it can also ask a higher selling price. So whatever side of the table you're on, I think ultimately that's what's driving the dollars. That's the money printer, is the system itself. So yeah, I think there's some really basic stuff, and maybe it's worth like creating some sort of guide for evaluating these things. But just as an example, let's say someone is selling a relatively new plant and they have a really bizarre AOI curve in the pan file, and there's plenty of those out in the world, but it has 2 to 5% swing in the performance of the system. So you could imagine that there's a seller is selling that to you, and so if you're a buyer and you don't catch that small thing, it's looking at one little thing could have a large impact on the deal. So
yeah, that's a really good point. And
Really
before
good,
I ask
yeah.
you guys for some final thoughts, one thing that we kind of brought up earlier in this call but didn't really address fully was just this idea that the models for these projects over time have changed a lot. The assumptions that go into the models have changed a lot. Even on our side, speaking as an IE over the years, there's things like snow modeling we've been way off on, and just when we think we understand it, we realize like bifacial modules perform way differently when it comes to snow than monofacial modules. But Daniel, I know we've only got a little bit of time left, but just one maybe last question for you is, what can you just talk a little bit about the type of like discrepancies that we see in the original models that were factored in on these projects, and kind of the guidance that we provide to clients as far as like how they should be looking at projects from a modeling standpoint?
You mean just from the initial P50?
Yeah, like essentially like retuning original P50s based on, like updated and industry intelligence and things like that, sub-hourly clipping, all these things that we know a lot more about now than we did before.
Yeah, exactly. So sometimes we'll be sent a PVSys, like the whole zip file, we can upload it, and instead of making a new one, we'll just modify some of the loss factors in there. Whether or not it's, making edits to like the OND or pan file that we think maybe had some bias in them, or sub-hourly clipping at least for some of the older projects, wasn't even accounted for, which is an artifact of having hourly weather files. I'd say those are the two biggest ones. And then a lot of times soiling underestimation is a really big one. And then if the site's older, I think mismatch like propagation over time and like with degradation, and how it's not linear because of modules degrade at different rates. And then if some are soiled, you get, that's, I think, just I think that's normally like we will bin as like a residual loss, as like we don't know where this loss is from because we don't have that granularity. But yeah, in general, right, our whole industry's had P50 bias from the
Yeah.
get-go.
And the mismatch increase in later years is real, very real. So that's really interesting. Okay, well, I think that actually brings us to the hour. So I just want to take this opportunity to thank our panel. You guys did a great job. Really appreciate hearing your perspective, and to thank all of you in the audience. Great questions. Really appreciate your content. We will be posting this video online, and we will be happy to make contact information available for all the participants. If you guys have questions, feel free to hit us up. And thanks everyone for your time. Have a good
Thanks,
day,
Brian.
everyone.
Thanks, Brian.
Thanks all.
Thanks.